4th of March, March 4th. People, March 4th into the future, March 4th, 2025. And what is happening in the world of Bitcoin and crypto? Well, if you look at the altcoin charts, everybody in the retail trading space who uses traditional technical analysis or follows the news was so sure that the executive order by Trump was going to cause this massive Trump pump and we were going to the moon. And what did I tell you? I tell you that's not what caused the pump, is what I told you. Caused the pump was the bull divergence that was building up and the mean reversions that were building up. And those mean reversions happened, right? On the daily candle, you saw a bunch of them happen already. And then what else is happening? Yeah, so you had distributions and mean reversions happening. And then when they went up, in many cases 9% to 70%. I think Cardano was up like 68, 70%, something crazy. And then, some of them went up as little as 9% in a couple of hours. Some of them went up, 15, 20%, 30%. Again, Cardano was up like 70%. And then what happened with Ripple and, Solana and everything else? Well, they spent the whole day yesterday, literally from the beginning of the daily candle, just coming down for the most part, right? Sure, on low time frames, there were scalps to the upside, but there were also mostly scalps to the downside. And why was that happening? Well, same reason, distributions and mean reversions, right? So just like there were distributions and mean reversions happening over the weekend, right? Distributions all the way, there were distributions and mean reversions to the downside, distributions and mean reversions back to the upside. A bunch of those targets were hit and they completed their mean reversions, and many of them went and spiked through the third band of the RMLR above those RMLRs. So they proceeded very quickly to mean revert to the downside. And a lot of the coins, including the big, the five majors, we can call them now, right? The major leagues of crypto, or the five majors, or the major five, or whatever, the big five, are basically officially now, right? Bitcoin, Ethereum, Solana, Cardano, and XRP. It doesn't matter if you like them or not. It doesn't matter if you think they're scam coins or not. Those are the five coins that the U.S. government, right, which created the Fed, which issues the U.S. dollar, which is the global currency reserve. That same U.S. government, which is the world's superpower, technically still, has decided that those are the five major cryptos that it's going to keep in its currency, digital reserve. Again, whether you like that or not, it doesn't matter. At this point in time, right, those are the new five major assets, and they are the five major assets of crypto. Could it be that there will be others added to that reserve in time? Yeah, maybe. I don't see any reason why you wouldn't put Litecoin in there. To be honest, I'd put it in there instead of even one or two of the others, but it's neither here nor there, right? We know what the five majors are: Bitcoin, Ethereum, XRP, Solana, and Cardano. Well, all of them proceeded to have dumps out yesterday, and they were all just distributing after their mean reversions to the upside. They were distributing some more, and then they mean reverted back to the downside on the relevant time frames. And some of them are distributing away now to the downside, right? Heading down further. Like if you look at some meme coins, right? There's a bunch of them that are even significantly lower now than they were right before that that pump on Sunday, right? Before they started running to the upside. Why? Okay, because people took profits, right? People, the smart money specifically, realized, yeah, this is just a one-off take profit event. While this is significant information from a geopolitical and economic prospect, or perspective, I mean, it doesn't change the VEPs of the market. right? So while smart money was enjoying the move to the upside, if they were in the trades to the upside, they did not see it as an opportunity to get on longs and just stay, to the moon. Like, no, they saw it as just another trade and take profit opportunity. And that's why literally I told people when it was at the tops on Sunday night or Sunday, depending on what your time zone was, right? Or Monday if you were in Australia or New Zealand or something, right? But Sunday, my time, when it was happening, I was telling people, take your profits. Like, don't just sit in this. If you're in the Alpha Trading Discord, you would have seen people writing that they did take their profits because they're smart. There's a reason they're in the Alpha Trading Discord, right? And even yesterday during the live stream, we were telling people, look, man, this does not look like it's just, yes, there's a potential for these coins to move to the upside. There's always a potential, right? Sure, no problem. There's always probabilities to the upside, the downside, and sideways, by definition. That's what makes them probabilities, not certainties, right? But, right, even so yesterday in the live stream, we were saying some of these coins don't look like they're in good areas to short because they've come down significantly from those little local highs that happened the day before. But keep your eye on the lower time frames because they certainly could dump out higher. And they did. And if you looked at the lower time frames, you would have caught those moves to the downside, right? That's why we're always very clear about saying that. Like, there's no 100% guaranteed certainties when it comes to, trading, right? The only thing you can know for sure is that the markets move according to the VEPs. It's not the other way around. The VEPs don't move according to the market. The market moves according to the VEPs. The VEPs is leading information about what the market is actually doing. So the market, technically, yes, the market is the living thing, the organism that is making its moves. But the market traders, if you will, that are trying to figure out, do I buy, do I sell now? You got to keep in mind the vast overwhelming majority of traders have no idea what they're doing. Like, market participants are really uneducated or ignorant or naive or all of the above. And that's by design, right? And the education that they get access to most of the time is very bad. And again, that is by design, right? The companies that have the biggest bags make sure that the worst trading technical information is what spreads the most. That is by design. It is not an accident that you constantly hear about EMAs and SMAs and triangles, channels, all this garbage, right? The RSI, the stochastics, these things have nothing to do with trading. And yet people in trading use them constantly, right? These things cannot tell you the probability of an asset moving up, down, or sideways. They just can't. Okay. Now, why is it that the VEPs can tell you that with more certainty? Well, because the VEPs tell you that based on the maths that actually move the markets. How do we know they move the markets? Well, because the high-frequency trading algorithms that are built by quant shops and by high-frequency trading firms who have their own internal developers, right? These massive algorithms that are run by huge networks of computers and manned by tons of people around the world 24/7, right? Everyone from engineers to DevOps to BI people to marketing people, salespeople, assistants, traders, managers, executives, you name it. There's a whole food chain and a whole supply of people, literally thousands and thousands of people around the world who use these tools to make sure that they're running smoothly 24/7, including holidays. They don't take time off, right? Yes, the companies are technically, their employees are technically off on holidays, weekends and holidays, but in reality, there is always somebody manning the fort because they have massive, massive bags, right? And so it's important for them to have they need some eyes on the ball at all times, no matter what. They can't just shut the machines off for 48 hours, right? Or 24 hours. It's just, they can't, right? It's cheaper to pay people even double overtime, right? Even triple overtime to man the fort and let the machines consistently generate profits for them. It's more profitable for them, actually. It's not just cheaper, it's literally more profitable. It would be costlier and it would eat into their profits to a significant degree if they had to literally stop doing what they're doing with those bots that are running even overnight trades 2 days a week at the very minimum, right? Plus all the hours in the day that they don't trade during traditional trading hours, plus all the holidays, right? Like if you add it up, when you think about it, there's like barely 200 days a year that they actually trade, right? If they just go strictly by the actual official calendar, right? And think about how many weeks a year do you work? Let's say you got 52 weeks in a year, okay? And you work 40 hours a week. Well, technically markets don't trade 8 hours a day, right? If they trade from 9:30 a.m. U.S. Eastern Time, right, until like 4 p.m. U.S. Eastern Time, that's like 6.5 hours a day, right? It's just a little more than a quarter of the day, 5 days a week. And then you got to remove holidays and weekends. What are you left with? You're left with a very small percentage of the year is there actually any trading going on. Well, when your bots don't sleep, you have to make sure that the people that man the bots also are monitoring it 24/7, 365. And they do. Anyway, if you want to learn how to trade all that, just go to alphatradinghq.com/discord. Once again, alphatradinghq.com/discord. See you guys. Happy trading.